Well, we think that no matter who wins the election on November 3rd, that interest rates are going to stay low for quite some time to come still. We do have the Fed now doing what's called average inflation targeting. In other words, where in years prior, they saw inflation moving higher, they'd hike the Fed funds rate, which is currently at 0 to 0.25%. They've changed their regime to now doing average inflation targeting, which means they might let inflation run hotter for a little while before they'd hike interest rates. In other words, the current Fed funds rate will stay where it is for quite some time to come, if not for the next few years, perhaps. That means longer term bond yields in all likelihood also stay low. There's also something called the output gap, which is actual economic growth minus potential economic growth. We all know that there was a big hole in the economy when COVID hit, and it's going to take years for that hole to be filled in. When you have a big hole like that, inflation stays generally low, which means bond yields tend to stay low as well. We've also got quantitative easing. Let's keep in mind the Federal Reserve, the Bank of Canada are both still buying government bonds. That'll act to suppress longer term bond yields also. It doesn't really matter that much for government bond yields who's going to win this election. It might matter a little bit, and the nuances are, to a certain extent, if Biden wins, and even if Biden wins, it comes down to, do the Democrats win the Senate? If the Democrats win the Senate, we probably expect a bigger stimulus package next year. That should mean personal tax rates are also going to go up, particularly for those making more than $400,000. And Joe Biden has also said he will increase the corporate tax rate from 21 to 28%. Now, that's not likely to happen for a couple of years, but it does mean that corporate profitability could be suppressed a little bit, particularly in the latter half of his mandate if he were to win. And that should mean that corporate bond spreads, the extra yield you get on corporate bonds, could be a little wider than they otherwise would be if Biden does win this election. It also means if Biden wins, you're going to probably get some reimplementation of regulations, which means more red tape. Trump has been, to a certain extent, successful in reducing red tape. The re-implementation of some of those regulations that he abolished could be problematic for certain sectors of the economy. So you have to be very sector specific, or more focused on sector specific when you're buying corporate bonds, for example, the energy sector. It also could mean that with higher corporate tax rates, that CEOs delay corporate or CapEx decisions, and that could mean a slower economic recovery. But I don't expect to be all that material. It generally hasn't mattered who's running the economy. Whether it's Republicans or Democrats, the economy tends to still do fine over the long term. So what's the impact on fixed income if Biden wins? Well, it could be modestly wider corporate bond spreads. As I said, the potential for inflation to materialize as well. You could have a bit of a drift higher in bond yield, but we think that would again be a buying opportunity because the amount of debt that's out there in the world now means that higher bond yields act quicker to suppress economic growth, and bond yields tend to go back down again. We look at that as a buying opportunity if it happens. Now, if Biden wins and the Republicans take the Senate, it means less stimulus, there could be gridlock, less re-regulation, no corporate tax hike unless Biden was to do it by executive order, which he could. There's been a lot of executive orders done the last few presidencies. And all in, I think it means for the bond market that you'd have less widening in corporate spreads and even less of a rise in longer term bond yields. Now, the other potential is that Trump wins again, and I think we'd have to assume if he were to win that the Republicans would hold on to the Senate. If that happens, we think you still would get a stimulus bill. It wouldn't be as large as it is under the Democrats, perhaps, but it would still be material. You'd probably get more deregulation. So you get a modestly quicker recovery, no corporate tax hike, wouldn't really be, in our view, any real material widening in corporate bond spreads, and not much of a rise in longer term government bond yields also. So fairly stable, the status quo if Trump wins.